Some of the pitfalls, if you have qualified CCPCs, you don't want to use partnerships because a partnership only gets a 20% credit. So there's cases like All Color Chemicals where you had two qualified CCPCs thinking they're going to get their 35%. They do the work as a partnership and they lose all the refundable credits. Associated corporations, as we talked about, are companies under common control. Your Schedule 49. There's a good case called Mimitex Pharmaceuticals where we had a company that was owned 50% by an investor out of California and two other shareholders in Canada, directors 25% each. And there's an issue of no control. So 50-50 is still not controlled by foreign or public companies, looks like a Canadian-controlled private corporation. However, during the SR&ED review, it became privy to the reviewer that the foreign director in California had done certain things in the year, like fire the head of SR&ED and replace him with someone else, and certain other transactions, without ever asking the concurrence of the other directors. Not, hey, I recommend we fire the head of R&D. Do one of the two you concur? He just did it. And unfortunately for the company, the CRA and the tax court said that was clear evidence of factual control, even though there wasn't no clear voting control, not a CCPC. Company lost $230,000 of cash refunds, $230,000. So here's a quick chart on what does associated mean in the effects, what are related corporations, and what are connected. We won't get into the details of it, but it's there for your review. For those accountants in the room who want to talk about financial statements, how to disclose it on the tax returns, you can either claim the expenses as research expenses, or you can capitalize and amortize them over the expecting earning stream of the product or process being developed, which is actually the handbook under generally accepted accounting principles says you should do it if you meet 5 development criteria that are listed in there. Section T is the actual tax forms themselves in separate sections. The T1s are the actual expenses incurred along with the project descriptions. So the project descriptions from Section D are now transformed into the tax returns in the T1.2s. So there's 4 different projects there. The T2s are your Schedule 31, which is what are my ITCs on those expenses. So one form is just the expenses. The next is what credits do I get? Do I get 20%, 35%? How much is applied against tax? How much is refunded? Okay? Schedule 49 I also consider in there to look at what's my expenditure limit, what were my associated corporations prior year. Schedule 1 is your taxable income, so we show how the SR&D affects the add-backs and deductions. Okay? And T4s are transfer of non-arm's length expenses. Those don't happen often, but if I have a subsidiary do work, I can transfer the credits from one to another by filling out these forms. In addition, T5s to 7s are your Ontario schedules, OITC, 4.5% non-refundable credit, and the Business Research Institute, 20% fully refundable credit on payments to universities. Wrapping it up, you should, if you're paper filing, always file at the tax center. All of the information is now in the form. You don't have any attachments or anything like that. Ideally, you should be e-filing the returns after June 30th, unless it's an amendment, in which case you have to paper file. So again, file it to the tax center, not to the district office. CRA may do a desk review in most cases, and in 15% of cases they actually do a site review for the technical. More often they'll do just a financial review and they may ask 1 or 2 questions. So we talked about PCPR done by the account executive. There's industry specialist, and there's also a first-time claimant service. Some of the things that, if you get into a dispute that you should look at, is the best is they give you a 30-day letter. Hey, we disagree on some stuff. You got 30 days to provide more information. That's how I like to deal with issues. The next is actually to ask for a second administrative review. I'm just not getting along with this reviewer. I want his or her manager to come and we'll all meet together. That's going to take about 6 months, typically. The next is to file a notice of objection, which typically takes about a year. Ends up usually back at the same people, so you don't do anything there anyways. So you file this, and usually you got to wait 60 days, and you can apply right to the Tax Court of Canada. And that's typically going to take 2 to 3 years. So again, if you can make an agreement and negotiate with the CRA in 30 days, this tends to be the way to go. Really, if you go into an appeal, you're going to hurt the company because they're going to stop assessing you on the issues in future years, and they're going to start holding up 2 to 3 years of claims. So you really have to feel strongly about an issue to bring it to court, because the CRA is kind of unfair on what they're going to do to you for the next 2 to 3 years if you stand up for your rights. That's a big complaint practitioners have. It's unfair that they discourage people from standing up for legitimate rights in an appeal. Okay? And just some time frames of how long, when you go to an appeal, it would take. The big one to notice here is that, various things can take a long time, but there's a discovery process, and that's the real roadblock. That can take years. Forms that you file. For claims being issued now, we want to do it all electronically unless we're filing an amendment, in which case we still want to use the most recent version of the form, or we want a paper file. Forms that you file. For claims being issued now, we want to do it all electronically unless we're filing an amendment, in which case we still want to use the most recent version of the form, or we want a paper file. Last slide before we break for lunch is that we find that the process usually goes on one of these two curves here. Often we start with a new client. At the end of the year, we're hitting the 18-month filing deadline, 17th month, and the manager says, I'll do this all myself, send me what you need. And as we start asking more and more questions and asking feedback on what they give, they start to panic and spend 50, 60 hours at the end of the year doing this. Complete waste of that person as a resource. If instead, if the manager can take 10 to 15 minutes a project, and at the start, that first meeting, get the team to agree, what is it we know, what are the top 3 to 5 variables of uncertainty? Can we all agree on that via vote or proxy or however we want to make that agreement? And then really allow the people who do the work to talk about how many alternatives, what they learned on those variables. The manager should just be doing a review, adding additional time and cost, maybe additional conclusions. Okay? At which point, this becomes a very easy process. It becomes fairly objective, in my opinion, on what costs are in or out, and we can focus on value added, like supporting sample sizes or things of that nature. All right, I welcome everyone to grab some food. We're going to take about a 10-minute break, and then we'll illustrate the R&D-based software enables us to do this all online. Thanks.